Hello, good evening, and a warm welcome to the discussion on charting a successful career in the investment management industry. This webinar is jointly organized by the CFA Institute and the Hindu BusinessLine. Investment management is a fancy and coveted term for both students and professionals. As the tagline in an old advertisement goes, investment managers are always the neighbor's envy and owner's pride. What is this alluring field all about? What does it take to get a break into this world of managing money? How do you build a sustained and a successful career here? To guide you on this path and answer all your questions, we have a carefully curated panel of professionals from different walks of the industry to share their collective wisdom with us today. Introducing Aarti Porwal, Country Head, India CFA Institute, who is our first panelist. With India being one of the top markets for the CFA Institute globally, Aarti plays a crucial role in driving the India strategy for candidates as well as members. She led the India operations for SEMA earlier and has also worked in various roles in the financial services and the insurance industry prior to that. Welcome, Aarti, to this discussion.
Thank you, Vardhini, for that introduction. Always happy to be on this platform and to interact with the participants.
Lovely to have you. Yeah. Our next panelist is Shagun Thukral, a doctorate, a CA and a CFA with over 18 years of experience in the investment industry. Starting her career as part of a buy-side fixed income team, she moved to the education industry, teaching subjects like financial markets and financial accounting. She has also donned the hat of an entrepreneur in the area of wealth management for retail and HNI clients. Hi, Shagun. Welcome.
Thanks, Vardhini. It's a pleasure being here. Looking forward to interacting with all our participants.
Sure. Next panelist is Jayashree Sati, who heads the India Investment Analytics Delivery Function in State Street. Jayashree is also a CA and a CFA. She has over 25 years of experience, including 18 years in investment research and analysis across various asset classes. Hi, Jayashree. Happy to have you.
Thank you so much, Vardhini, for the nice introduction, and looking forward to the discussion.
Sure. Our final panelist is Rinda Lakshmi, Vice President and Credit Manager, Northern Trust. She is the head of credit analysis team for wealth management clients at Northern Trust and is responsible for offshore delivery of services to Northern Trust's Chicago office. She is a CFA as well as a cost and management accountant. Hi, Rinda. Welcome.
Thank you, Vardhini. Thanks for the nice introduction and looking forward to the discussion.
Sure. I'm also sure that audience are eagerly waiting to listen to the experts. Let's get started right away. In any discussion on investment management, I think understanding the industry is key for any candidate looking for roles. So I thought we could start off with an idea of what the industry is all about. So in the first round. So I think Aarti is the right person being the head of the CF Institute. She has an idea of what kind of roles the investment management industry has to offer, and for the benefit of participants, Aarti, can you actually define investment management? Because a lot of people love these fancy terms: hedge funds, iBank, private equity, buy-side research, sell-side research, and whatnot.
Thank you, Vardhini, for that question. And it's definitely a question that is asked by everybody. And I think you described the industry pretty well when you said that there's a lot of aura around it. And there is also a lot of perception of complexity around it. And I hope that through the process of this webinar, we are able to simplify what it is all about. To put it very simply, the investment management industry consists of professionals and institutions that manage the wealth of people or institutions. So managing other people's money is what investment managers do. So the space consists of a set of people or institutions that own assets or money and therefore have funds to invest in. Those institutions or people have to decide on where to invest the money and how they can get the returns with the level of risk that they are ready to undertake. So they require professionals who can help them make those decisions. Then the second set of people are the asset managers, actually, or people who actually look at creating products into which the funds can be invested in. So that's the space where products are created, which includes mutual funds, which includes other products, etc., where people can invest their monies in. Then there are a set of intermediaries who help with advice on where one should invest, and or provide you, or through brokerages or etc., connect the buyers and sellers of products so that the funds are channelized to the correct or appropriate investments. Throughout this value chain, there are people who handle institutional clients, or there could be people who handle retail clients. And what is common thread is that in this profession, one has to be conscious that one is looking after the second most important asset in a human life or value. So after health, after all, it is wealth that one takes care of. So just like you need very strong professionals to trust your health with, like say, for example, you would go to the right doctor with the right qualification who has kept themselves updated with terms of knowledge, skills, and has also a strong sense of ethics. The same principles apply to an investment manager, that one has to be sharp with one's skills, extremely sensitive to the client's needs and requirements. 3, should have kept himself or herself or themselves updated with their skills and knowledge. And 4, should have a strong sense of ethics and a code of conduct. So that's the basic value chain of money, investment management as a profession, and the key competencies that are required to work here. I would request my other colleagues on the panel to add in, because they are professionals in the industry and they can give you more details about the various other technical areas where one can work in the industry.
Yeah, that was very well put. A very good bird's eye view, I guess, of the whole industry, Aarti. Thank you for that. So maybe we could ask Rinda, because she comes with a wealth of experience in credit research currently, and in her previous role, she's done equity research as well. So, Rinda, can you tell the audience, what kind of, what is the kind of role that you do, and what are the opportunities here?
Sure, Vardhini. Thank you, Aarti, for setting the stage with the details of the asset management industry and the various functions that can exist in the asset management industry. So primarily managing clients' money, or managing the investments of the clients is what we all do in asset management, in whichever form, shape, and size. So I come from a slightly different industry background. So I started my career with a client-facing role. So that gave me a lot more insights on what do clients actually expect, because most of the roles that we look at are desk jobs, right? So right now I'm in a desk job, but when I was in a client-facing role, it gave me a lot more perspective, a lot better understanding of the nuances when you deal with a client directly. Then later I moved on to a desk job where I was working as a equity research analyst. And this role is slightly different from the regular research that we are talking about, because the company I was working for earlier was doing equity research for VC and private equity investors. So that research is slightly different because we are looking at different themes, different sectors, and where are the private equity investors right now looking at which sectors, and we would do a sector research and entities which are currently in that particular sector, and we would look at preparing projections, KPIs, and several other data collection. And within this equity research, we were also helping certain companies with their strategic planning, where we were doing peer analysis, competitor analysis, and various other things. So this would involve financial analysis, valuations in terms of private equity investments or early stage investors, at what prices have they invested, and the later stages of investment, at what price is the right price for entry. So that was the kind of work that I had done in equity. And then I moved on to credit research, where we were doing research for an Indian bank. And currently, I'm with a multinational company where I'm part of the service center. So I have, varied experience, starting with equity, then into credit research, but very interesting areas, I would say, for any of the CFA candidates to look at.
Oh, Rinda, thank you so much. Yeah, this equity research normally is understood differently, but you opened up a new area which probably the audience or the students could explore in terms of equity research. That's wonderful. So, Shagun, you have a background in fixed income research and wealth management as well. So, how do you define your jobs in this space, and what can young professionals or students look forward to here?
Thanks, Ardini, for that question. So I started out working in fixed income, which is, equity's lesser known or less popular cousin. However, if to all the young, professionals out there and people wanting to make a career in investment management, I would say that the fixed income space is actually much bigger than the equity space, and the opportunities here are just as exciting, if not more. I mean, obviously I'm biased, but if not more exciting than the equity space. So what does it need? I just happened to be lucky. I was a fresh chartered accountant, and I just happened to be at the right place at the right time to get this kind of opportunity. My job really involved investing into government bonds, corporate bonds, and the debt space for an insurance company as a buy side team. We also did a lot of credit analysis, like Rinda also touched upon, where we were evaluating companies in which we could invest. So, their credit worthiness, their business models, pretty much what an equity analyst also does. So, those are the kind of roles that you have. It's a very exciting space in the sense that it's very dynamic. It's as in terms of pricing, where the markets are heading. You need to have a very good understanding of the economy, the economic fundamentals, business fundamentals, right? So it allows you to incorporate a lot of what is happening in the world to make your decision-making process. In terms of what is happening in this space currently, we're reading a lot about private credit evolving in the alternative space. And I think this is, again, a very great time for someone to explore this area, since it's up and coming, and it'll offer a lot of opportunities as people are setting up these private credit funds. So I would just ask, students especially, to not close off their mind. Everyone wants to be an equity fund manager. There's a lot more to this industry that goes beyond, just being that person who's making those decisions, right? And as you hear from Rinda and from Jayashree again later, you'll realize that for the one person to make that decision, there's a whole team that is doing a lot of other activities to get you there. So just have a slightly broader horizon. Coming to wealth management, I think this space is great for someone who wants to be entrepreneurial, who wants to be on their own, but still be connected to the industry. Not to say that there are no job opportunities in wealth management. There are, of course. But I think it's great for, especially women as well, who want to be independent, have flexibility. It's a great industry for them to explore. Obviously, you need to have the technical skills and knowledge of various asset classes, investment options, how to do financial planning. But it's also great for people who have great people skills, marketing skills, who like to work with client-facing roles. It allows you, to client negotiation, how to get a client on board, how to work with them. So apart from just having your skills as far as your knowledge and skills aspect for technical side go, this is again another dimension that is necessary and very helpful. I think that's, to start off with, I think that's a lot to go on. Yeah.
Okay. That was a very different experience from what Rinda has had, and that way I think this the experience of this panel put together is very wide. So yes. So Jayashree, so you have been instrumental in setting up this managed account servicing business at State Street, working out of India. So what is the scope of work here for investment management professionals, Jayashree?
Sure. Thanks, Vrinda, for that question, Vardhini, for that question. And I could relate to everything that Rinda said and Shagun said in terms of what I did for setting up this particular business that you spoke about, right? So what we did was we about over a decade ago, we set up this particular business, which is managed account platform services for specifically for alternative investors, right? Institutional investors who are interested in the alternative asset class as an investment vehicle. So what we did at that point in time was we evaluated the customer's needs, the investor needs across the globe, and realized that there was a real problem statement as far as alternatives were concerned, where institutional investors were beginning to shy away from the alternative space because they were afraid of specific nuances post the financial crisis and so on in 2008. After that, it started to create a dent in that space. So the institutional investors were essentially looking for something which will give them more assurance in terms of liquidity, right? Because that was the key criteria, which is very low as far as alternative space is concerned, hedge funds and so on. B, transparency, because they have no idea what's going on as far as their investments are concerned, because they invest in a hedge fund and it's completely a black box. And they get only transparency in terms of what's happening on a quarterly basis, in some cases monthly basis, and so on. So they don't know until a problem has happened. After that, how long will I take to encash, get my money back, right? If the assets have all got washed away in a particular meltdown. So what we did was we said, okay, let us look at these two problems out of the several other problems that these investors are facing. And that's how we launched this particular business, where what we did was just to demystify this fancy term again of managed account services. We created a platform, so to speak, which if I break it down into components, it is nothing but an end-to-end service where we say that we will take care as an agent of the institutional investor, as an independent agent, independent entity. We will look after all the service providers on the investment management ecosystem. So, and then we say that, okay, we will look at the service provider oversight. We will do NAV validations, look at the values that have been assigned to different assets, whether it is equities, fixed income, or alternative space, whether they're valued correctly by the administrators. We will look at the investment managers, whether they're following their investment mandate to the T. And then we will look at portfolio analysis, portfolio performance based on both past as well as predictive analytics, run them through, and then provide daily transparency to the investors, right? And say that this is exactly what's happening in your portfolio at a very high level. And that way, the investors are more comfortable that they have a visibility at a high level on what's happening within their portfolio, A, and B, this also facilitates them to be able to take better investment improve their investment decision in terms of when they want to exit from a particular hedge fund or an alternative investment and so on, if things are not going fine, or have active conversations with the fund managers, right? So that also was something which was a big enabler through our platform. And the other thing was they were able to make better manager selection decisions based on the reports and analysis that we were providing. So all in all, this is exactly what our service or our business was catering to. Now, if I look at the scope as far as this business is concerned, as far as India, if you look at India as a base, because the participants are from here, the alternative investment space globally is growing, right? And there's a lot of interest clearly there, and it is growing to trillions of dollars. And as far as India is also concerned, you can see a lot of news on how we are growing on the alternative space. So this as an asset class is bound to grow, and hence the career opportunities that you have in this particular space is definitely enormous, right? It's huge. Now, if I look at managed accounts as a career opportunity, it's not necessary that we have to look at only this fancy term and say, oh, managed account services is what we are looking at. Because if I break it down into these components, which I spoke about, which is manager selection, service provider oversight, risk management, manager oversight in terms of compliance, investment compliance, and so on. These are the things that are done today, even in the alternative fund management space. So it is not essentially only for alternatives, right? It's also in the traditional space. So one can easily move from the traditional fund management industry into this space and look at building their career and fungibility across these two specializations. However, if you want to specialize in a particular asset class, you need to accordingly go through clearly focus on that specific asset class so that you can be more stronger in your portfolio selection, portfolio construction, as well as risk management faculties.
Okay, that was very elaborately and very well explained, Jayashree. So thank you for that. And before we move on, so there are quite a lot of emerging areas, and rightfully so, a lot of audience questions at the time of registration and even now on some of these emerging areas. So I thought we could probably take up one or two oft heard names these days in terms of emerging areas now, and then probably later on we could come back to the rest. So one thing is the coming of artificial intelligence. What kind of role does it play in the investment management profession? Where do you see artificial intelligence being applied? And number two, how do you see jobs changing? So I would throw open this question to all the panelists. So anyone can take this.
Okay, so I'm happy to begin.
Okay.
It's because CFA Institute is always doing extensive research on the investment management industry and how things are changing for investment professionals to prepare them for the future. And we've been looking at data analytics and artificial intelligence, their role in the industry and how they are supporting or challenging the industry. The one thing about the investment management industry is that it involves the rational decision-making. Investment decision-making, as far as possible, is a rational decision-making process. And investment management, basically, as the participants mentioned, consists of making a number of investment decisions. Now, the rational decisions are typically based on a high level of data and analytics of that data, historic trends, historic data, as well as future trends, where it is going, etc., and figuring out risk and return correlations. Now, that level of analytics after a certain point, especially with the vast amount of variables and data available in today's world, becomes too complex for a human being to manage after a certain stage. So therefore, the data analytics has actually been a boon to the industry. Tools that help us to analyze the data and simplify complex variables or correlations to make investment decision easier is very useful for investment decision making as a process, and ensures that human errors and human biases are reduced, if not eliminated, in the decision making process. Now, for that to happen, therefore, data analytics comes into space. Now, does that support or challenge recruitment or roles in the industry? It actually, I would say, supports as long as you have the right competencies. It can challenge you if your competencies are extremely limited. So if you're somebody who could only churn data and analyze it, maybe that is a role that a machine can take over. But if you are somebody who can actually help program machines to analyze that data and to simplify complex data and provide supports, provide the necessary information to support decision making, if you are therefore have the technical and competencies to actually program, for providing the output that is expected, then you have lots of roles. In fact, a number of engineers are today involved in the investment management industry, especially in the area of supporting data analytics or creating data analytics or getting artificial intelligence to work to support investment decision making or analyze data and churn out information. So if you have that knowledge and ability, you are actually in for a good ride.
Okay.
And if you support that technical knowledge or the ability to program machines with the knowledge of the industry, meaning knowing what the industry or the client wants when you're producing output and knowing how that industry operates, then you're definitely a very strongly competitive individual, competent individual to work in this industry.
Okay.
So that's why it's creating more roles for people with technical knowledge, that is technological knowledge, as well as technical and analytical knowledge of how the industry works, or basic foundational knowledge of how the industry works.
Okay.
So that way there is tremendous potential in every area of finance today. Technology or fintech is playing a major role. In fact, even basic things like currency are becoming digital in nature. And they're becoming more complex in the form of cryptocurrencies or whatever. So when we move into that industry where money itself becomes a Bitcoin or becomes digital in nature, the intervention of technology in the creation of products and currency means that there is more necessary, more skills, more people and more resources required in this area who know technology and also know investments and finance.
Very elaborately explained, Aarti. Thank you for that. So I think the audience can take heart from the fact that there are, artificial intelligence does help them in their decision making as well, and they could also pursue specializations in that in the investment management industry itself. So, yeah, and the other area outside of artificial intelligence, which I thought is, being talked about a lot, is ESG compliance or climate related roles. So, for example, a lot of finance and investing is nowadays about ESG and being, supporting the environment. So, what is the scope for investment professionals? Maybe I thought, Jayashree, probably you could take this question, or Rinda, one of you.
Sure.
Yeah.
So yeah, you're right, Vardhini. So ESG is definitely growing in importance across the globe, right? And in India as well. For various reasons, some regulatory focus, and some, for example, companies coming up with their own mandates from a CSR perspective and so on. So given ESG has three pillars, which is environmental, social, and governance pillar. Environmental pillar is just one of it. We do have a societal as well as the governance areas as well. So all these three are definitely being focused upon by various companies, and hence, as far as investment mandates are concerned as well, the asset owners and asset managers are including this as a very core component of their investment philosophy and investment mandates. So as now, if we look at that, so this being an important aspect, and this is definitely going to be here. It is only going to grow further as far as relevance to the investment mandate is concerned. What does it mean to us as finance professionals or aspiring financial professionals? What it means is that there are so many roles which are coming up, right? As ESG researcher, because to be in the ESG space, to be able for investment managers to be able to invest in ESG centric companies or run an ESG mandate, it is important for them to understand which are the companies that they can invest in, right? Which are ESG focused. So how do you identify those companies? For that, you have certain data models, ESG models, scoring models that have to be put together, which are done by these researchers who are specifically specializing in evaluating these parameters, coming up with risk models and so on. So that is a researcher role which is clearly out there, right? The second one is as a data analyst. Now, data stewardship is extremely important as far as ESG investing is concerned, and it has a huge prominence and role. Now, the third, of course, is you be a portfolio manager, investment manager who is going to go and invest there. But as Shagun rightly said, it is not just about going there and being the investment manager, but there are so many other roles in the background, which is really facilitating these investment management decision and trading functions, right? And so the researcher, the data analyst, the advisory and consulting roles, there are a lot of consultants, whether it is EY or Ernst & Young and various other consultants who are also working extensively in this space, where they are evaluating various parameters, helping improvise the scoring models, and providing consulting services to the investment management firms, right? So there is a plethora of opportunities which are getting opened up accordingly in the investment, in the ESG space as far as investment management is concerned. Now, I just urge all the participants to go and see what we have as far as the ESG certification provided by CFA Institute is covers as curriculum. And that will give you a good insight in terms of what it entails. And do the certification if you're passionate about it, right? And that will help you get an entry into this space, so to speak.
Okay. Rinda, would you like to add anything to this?
I think Jayashree has extensively covered about this, and I second her thoughts on various roles that can open up in ESG that are open. There are some firms which are specializing in ESG research. So the CFA Institute ESG certification will only help, you get that role if you are interested in the ESG side of things. So that's all I can add on the.
Okay, that's great. So I think we've had a fairly extensive discussion on the opportunities and roles. So obviously, if you have a finance qualification on hand, nothing like it, because it gives you a great advantage to start with in the investment management industry. On that count, Aarti, I thought we could have a round of discussion on the qualifications and skill set requirements. So Aarti, so how does the CFA curriculum prepare one for jobs in the industry, and what edge does it give?
Okay, thanks for that question, Vardhini. Basically, for any industry and specifically for the investment management industry, we define skills in the form of T-shaped skills, basically. The T consists of the horizontal space where you have a wide range or a breadth of skills that are required across various levels in the industry. And then there is the depth of skills that is more in terms of technical knowledge and the depth of your technical knowledge about the industry, etc. So now if you look at the CFA qualification, what it does is it prepares you for the investment management industry, and it begins your journey in acquiring the depth in terms of technical skills. And so you know what is the foundation of the industry, what it is all about. You know how the investments flow through the value chain. You understand various asset classes that are in the function and how the markets function around it. It also prepares you to understand client needs and therefore create investment products or portfolios that support meeting the client's requirements. There is also quite a bit of focus on financial risk analysis. So you understand that how does risk come into investments and how one can mitigate them. So that is what it prepares you for. Across the three levels of the examination in the qualification, one strong area remains ethics. Ethics forms 15% of our curricula and supports and is assessed with 15% weightage. And that's because we have a lot of emphasis on the need for ethics, as I mentioned earlier during our conversation, in the investment management industry. So these are basically the competencies in general that the CFA program prepares you for. In addition, of course, there are certain new and emerging areas that we talked about. For example, data analytics, data sciences, knowing some level of technical understanding how machines or AI can be programmed to support investment decision making. And those areas also have now been covered within the core of the curriculum, as well as through our additional certifications that we have developed for investment management professionals. ESG is another area. And as Rinda and Jayashree mentioned, we have a certificate in ESG, but it also forms a part of our curriculum in terms of providing you the foundations. The third area that we covered now and is the emerging areas that we spoke about in terms of asset types or asset classes or industry sections, that is private markets and private wealth. Private markets being all the alternative space that Jayashree mentioned. Now, so what are we doing for that? We have therefore in the third level of the CFA qualification created now pathways beginning of 2025. We have specialization pathways in private markets and private wealth at level 3. Which will therefore help candidates to also acquire the specialized skills for the emerging areas in the industry.
Okay.
This is basically in a nutshell the competencies required and how the CFA program and we as CFA Institute support those competencies.
Okay, that's great to hear. Shagun, I thought I'll draw you in here. You've been quiet for some time. So, Shagun, so as a teacher yourself, you've heard all about the industry. You yourself have been in the industry. So, I mean, you know what your students know and you know what the industry wants. So is there a gap, and how is the academia rising up to what the industry wants? So what's happening in the education setup?
So I think you rightly mentioned that there is somewhat of a gap, and there are two aspects to this. One is what are the institutions doing? I think like especially the MBA space, or the postgrad space, there is a lot of focus on giving them practical experience as while they are working, while they're studying, right? So whether it is through summer projects, internships, life projects, and this is something that we encourage students to go out and do, even if if the institute does not provide that opportunity, you go out and get that yourself. So just to give you an example, if I wish to be employed or I'm looking for getting placed as an equity analyst, and that's a role that I aspire for, I would encourage whatever is you being taught in in your academic institute, you pick up a company, try and apply those aspects and do that research yourself. So build that Excel model or try to come up with a valuation yourself. So this is something that, we try to encourage. The second aspect to this is really the student outlook to this. I think somewhere there needs to be a switch between why am I here? Am I here for grades? Am I here to get a degree? Or am I here to be able to apply these skills in the real world when I get a job, right? I think the focus somewhere gets blurred, where we are just looking at what the grade is going to be and how do I crack this or how do I pass this and how do I complete this, rather really on the learning space. So I think it's both sides. It's not just whether academia is able to give them the practical experience as well. It's also from the student perspective that really how am I going to be able to apply it? There has to be a lot of initiative. And I think when we were talking earlier also, I gave you this example where if you give us a project to a student to do and say, okay, fine, estimate the value of a particular company, and you have to make growth estimates, how this company is going to grow over the next 5 years. And so their question is always like, okay, so what should be the number? We are so used to in school or in undergrad where you're told that, this is value A, this is value B, hence calculate value C. In the real world, no one is telling you what value A and value B are going to be. It is something that you're going to have to figure out for yourself, and sure, there'll be errors. But unless you try and make that attempt yourself, you're never going to be confident about doing it when you get a job, right? So I think as in terms of the education space, what we're really trying to do is make the mistakes now, try it out now, right? When you have the opportunity, so that at least when you get to the real world, you are a lot more confident about how you feel And I think what Aarti was also saying, one is the education aspect, second is the employability aspect, right? And I think the focus really has to be on making students employable. And maybe Jayashree and Rinda can add on this when when they're recruiting. Are we really churning out people who are ready to hit the ground running from day one? A lot of time and energy goes into training and getting them to that stage. So yeah, I mean, that is one aspect where I think both the student and the institutes really need to work on, is giving them more practical. The CA course does this really well, right? So as chartered accountants, Jayashree is also a CA. You spend 3 years of your time that you're studying, applying what you're learning. So you're as good as a practicing CA when you get out. So something like that, where you are able to apply what you're learning, is what is really required.
Okay. So Rinda and Jayashree, I'm sure over the last many years in your career, you would have done a lot of recruitment. So are you, essentially, what are the qualifications and skills you look for? That is question number one. And secondly, as Shagun has been saying, is there a change? Do you see a change, students more oriented towards practical applications nowadays than, say, 10 years ago? Maybe one of you can start and the other can follow. Yeah.
Sure, Vardhini, I'll go first. So I think Shagun and Aarti touched upon these aspects a little bit. I'll elaborate a little bit more. So when a candidate comes for an interview, there's a basic finance qualification that they come with. And when we see these candidates also have a CFA level 1 or a level 2, they bring a lot more knowledge base to the table when they come for the interview. And definitely that's a big differentiation that happens. Now, apart from that, I totally second what Shagun said, where just pick an annual report. If you want to do equity research, first you have to do it practically yourself. Pick an annual report, apply those concepts that you learned in level 1 and see how things turn out to be. How do you at least analyze the company, then value the company? What are the things that you need to do? And as Shagun said, if you're looking for, say, an equity research role, look for an internship in that area, at least something related to research. That's when you go for an interview, you can talk a lot more about what you did during your internship. What are you doing? So, there are candidates who do personal investments, and that's a very good topic to talk during the interview. How did I pick this company? Why did I choose this company? What is the basis? How did I value the company? So there's a lot of discussion happening during the interview, and there are a lot of aspects that are getting tested. So a level 1 or level 2 qualification coupled with some kind of practical, application of those concepts would be very helpful. And another thing which we haven't spoken about till now, but which is never emphasized, is soft skills. I think we never talk about this aspect of, a candidate. It is very, very important that the candidate comes there with the right attitude, with the right behavioral traits, right? Even if a candidate is technically 100% suitable, if the behavioral aspects do not match, then it would be a no, right? So it is important. Behavioral aspects or the soft skill parts of it is as important as the technical aspects, which is mostly not given so much importance in any of the, interviews. Candidates prepare a lot technically and go, and they fail on the behavioral side. So I would not, miss that aspect too. Over to you, Jayashree.
Yeah, I love the way you articulated. So I have very little to add, because you seem to have covered everything I would have like to say as well on the recruiting side. So the only thing that I would like to summarize from what you said was, yes, when I go out recruiting as well, I look at these attitude as the first and foremost criteria. The second one is the learning aptitude. If the person has enrolled themselves for certain courses, say pursuing level 1 or level 2 CFA and so on, then that person is in the growth, in the learning trajectory, right? And is keen to upgrade themselves, their skills and so on. So that is definitely a positive for me. The third thing is in terms of analytical bent, right? Ability to articulate in terms of how they went about doing an analysis, being market aware. That's extremely important, is what I would think. Like Shagun said, value company A, value company B, and so on. But what are the things that are happening? Okay, as parameters, Shagun would have thought, saying that if there is inflation, take that into consideration while calculating the interest rate and so on. But one needs to then go and feel curious and say, like, okay, what is the inflation rate today? Let me see what is it today, and then try to connect that, practically versus academically, and then say, and then able to bring the whole theory into life. So these are the things that I look for. But another important thing that I want to bring here is, probably you will clear the interview, right? Very quickly, very nicely, and I'm sure all of you all will. But once you get into the role, it's very important to have that curiosity alive, because it's very easy to get disillusioned with a particular segment of the big investment management world that you are working in, and you're given a small little area of scope of work, right? And then you think that, okay, what am I doing? I mean, I'm doing this, I'm uploading this file, I'm actually providing this data as an input, and so on. But if you're not curious how this data really fits into the larger picture, you're not going to be progressing towards the end state in terms of understanding the whole holistic ecosystem of investment management. So I think that is extremely important. Be curious, understand the larger picture, and keep engaging with your colleagues to understand how all the jigsaw puzzle falls in place.
Okay.
Right? So.
Okay. At this juncture, I thought I will, pull out 2 or 3 questions which has come, and very similar questions regarding the qualifications and skill sets which we are just talking about. So there's Satya Suresh, who says she's worked in finance and accounting for the last 7-8 years, and although she has a finance qualification, looks like she wants to move into finance and accounting into investment management. So there are plenty of others who've probably worked in finance firms, in financial services, in other roles which are not exactly investment management. So would the panelists have anything to, tell these people who have worked for a few years, how do they do the switch, if at all they can, and what are the additional skills and qualifications that they may need to pick up?
I think Rinda has an excellent story about how she got back from a long break to start working again through the CFA program and the community. Shagun is an excellent example of how things have moved for her, and she has switched for various careers. Okay. So I will let them share their stories.
Sure, Aarti. So yes, I qualified as a cost and management accountant, and as I discussed early on that I was in a client-facing role, and everybody was surprised. I mean, you're a cost accountant, and how come you're in a client-facing role? It is normally MBAs who do this. But, the back-end calculations, the back-end work that I had to do, helped my qualification as a cost accountant, to take on that role. And I love meeting people, right? That match my personality. So that's one important thing. Now, in terms of shifting from an FP&A role to, say, an investment management role, one thing that I had learned when I restarted my career, I went on to do the CFA course. So it's a very good idea to start thinking about, registering for a course, CFA course for a level 1. It is very easy. Since you have FP&A, experience, it's not very difficult to do the course, the level 1 and 2. And then you get back to the career that you desire or you aspire for. I got into analysis, I got into equity research because I have qualified all the 3 levels. And at the same time, be prepared to take a smaller role if it calls for. You may not, maybe you are at a mid-career level right now. Do not shy away from taking up an analyst role if that's what you get. But your growth path will be much faster, much quicker than anybody else. You are starting off like a fresher, but your growth will be much fast-paced because you have the qualification and you come with some kind of an experience which can be applied in this role also. I think being open to different roles, being open to take up a role which is a level lesser than what you're currently in, adding additional qualifications are the theme that I would go with.
Great. So if I could just add a little bit of mine, and I completely agree with everything that Rinda has said. I think I've pretty much had the same experience. With me, I moved from the investment industry to academics, and the pre-requirement for that is you need to have a doctorate, right? So I think be willing to do what it takes to succeed in that industry. So I enrolled, I got that done. Also, I think you should not be nervous or, scared about reinventing yourself if that's what you really need to do. Yes, there are compromises. I took a paid cut, but like, Rinda mentioned, it's okay. In the long run, that's paid off much better for me. When I moved to wealth management, again, I think the CFA community was a great space to kind of get your bearings, to get, advice, on how to go about doing it, what are the regulatory challenges, or what's the best path that you can take. Not just the qualification, but just the community of CFA charter holders is a great support system for anyone who is in this industry. So yeah, I think you have to be willing to put in slightly more work, whether it is in terms of getting the skill set that is required to succeed in the role that you aspire for, whether it is getting another qualification or a degree or whatever it is that is required. Again, if you need to take a pay cut, it's a small compromise to make. I mean, the compromise could be on multiple levels, right? It doesn't have to be a pay cut, but whatever it is, and if that is truly what you want, it should be okay for you to do that. When I moved to wealth, I had like a whole period where I wasn't earning anything because you're going out on your own, right? But again, you put in the effort, you put in the work, and the results eventually have to come. Yeah.
Okay. So I assume the same advice applies for people who are not even in the finance industry, because we've got participants from all walks of life. So somebody has said, I've done 12 years of medical transcription. Now I'm interested in investment management. And there's a participant, unfortunately, the medical transcription person is Mr. Vishnuvardhan. The other person has not given his or her name, but this person is in studying nautical sciences. And he or she is now having a change of heart. So I'm sure this applies for everyone who wants to get into finance, isn't it? So, take the right courses and then, make the right compromises, you will go ahead. I guess that's what it is for everyone. So that takes me to the final round where I thought a little bit of the softer aspects in terms of, the diversity and inclusiveness of the industry. So Aarti, so the CFA Institute is joined with BusinessLine for this panel, and then we have an all-women panel today. And all of you have professional qualifications in finance. So how would you rate the industry in terms of being women-friendly? So
there are certain perceptions which I would say are not true about the industry, as you can see from the panel. And the perception is that this industry is not women friendly because it involves arduous hours of long hours of working, and two is because it involves a lot of technical and quantitative skills which women sometimes are afraid of embracing. I would say that in terms of diversity and inclusion, some of the largest global firms in the world, and Jayashree and Rinda represent some of those firms, are part of this industry, and they are extremely devoted to the cause of diversity, equity, and inclusion, in not only in the industry but in general, and they support it wholeheartedly. CFA Institute introduced a DEI code to support companies in embracing DEI and to actually serve as a benchmark for DEI in the industry. And within a year of its introduction, over 100 firms in the USA signed up for the DEI code. And they were all from the investment management industry. We are now looking at developing that DEI code for other markets, including India. So there is a strong devotion to DEI. In fact, there are firms, private equity firms, who have even got lines of investment specifically which support investments into women entrepreneurship or supporting women entrepreneurs. There are lines of investments that support, as Jayashree talked about, only ESG related funding. So similarly, there are DEI related funding. And in many investing firms today, DEI is one of the parameters on which funding is judged and investments are judged upon. So there is diversity and inclusion runs through the industry very, very strongly, I would say.
Okay.
The second part is about quantitative skills. Again, it's not something, while quantitative skills are required in this industry, they are not the only sole competency that is required. And as I mentioned earlier, a lot of quantitative analysis is being taken over by machines. So the emphasis on softer skills, which again Rinda and Jayashree talked about, especially influencing skills and articulation skills are very important. Communication skills, both oral and written communications. After all, investment decision making involves having to get someone to part with their wealth to invest in something, and you have to get that person to trust you. And building trust requires relationship management and communication. So it's absolutely necessary that you develop these skills. Our research has found that women actually make better investment decisions because of their ability to comprehend risk and manage diversity better. So when it comes to gender equality, again, there is definitely an advantage to work in this industry if you are a woman. But per se, across the board today, whether it is gender, whether it's racial equality or any sort of equality and equity, we've seen that the global firms as well as the large institutional firms in India locally are very much involved and engaged in improving DEI across the industry.
Okay. That's wonderful to hear, Aarti. So, Shagun, I'm sure you must have seen a lot of companies coming to your campuses for recruitments. And do you see this in practice? A lot of people look for flexi work. For some, it means location neutrality is a top thing for them. For some, options for people with different abilities, different gender affiliations. So, Shagun, what has been your experience on campus? How open are companies, and what are students actually looking for?
So I think, what Aarti is saying is right. One, there is a lot of awareness, and, people are taking a lot of cognizance of the fact that, they need to keep these aspects into consideration while they're recruiting. So yes, we are seeing, whether you're talking about flexi hours or, location specific, those options and opportunities are being given to students when they're applying. However, I have to say that it's not across the board. Right. It's obviously company to company. It's in some industry to industry specific. Now, clearly, if I'm a trader, I can't have a work from home. So it's also role specific. That does my role permit me to have this kind of, hours? If I'm working, so a lot of, not necessarily finance roles, but even non-finance roles. If I'm working in a plant or, a location that is far away, maybe having a woman there is not the smartest idea. So there are certain constraints that we have to be cognizant of while, looking at this. So yes, while companies are aware and a lot more cognizant of what they were probably a decade or two ago, there has been a change on that aspect. As far as it comes to finance, I'm actually seeing the reverse happening. And I think somewhere what Aarti was saying also ties in. So in a class of say 50 of finance specialization, I have under 20% of the students as women, right? So there is an inherent fear to opt for finance, even if I'm inclined, or there's a conditioning which says that you're better suited for an HR role. I don't know where that comes from, but there is an inherent thing, that restriction that we probably put on ourselves in the younger years, and maybe I won't be able to cut it. Or, this, as it is, you're not seeing as many women out there in this space, in the investment space or in the dealing room or in the trading room. I'm not seeing the women. So maybe it's not the best place for me to aspire to be, which is not true. I mean, I worked in the trading room. It's not the case. You're as welcome and you're as good, if not better. Like Aarti said, the research shows, not me, the research says that we're as good or if not better in managing risk. So yeah, I think a lot of it is also the conditioning, etc., that needs to be broken, that, this is a place any woman can belong if she chooses to be there. Yeah.
Okay. I think Rinda can sum this up very well for us. So she came after a 7-year career break, I understand, and the industry has welcomed her with open arms, I guess.
Yes, Vardhini. I think one important aspect is just have a the goal set very clearly, It is very, very important. I may have started late, but my goal was very clear. What do I want to be? Where do I want to reach in the next 10 years or the next 15 years? I had set my goal very clearly, and whatever came in between, it didn't matter to me. There were successes, there were failures, there were times when I thought I'll just quit. And there were times when I thought I was so elated that I felt I took the right decision. You need a lot of grit and determination apart from the qualifications that we acquire when you're working with somebody who's just starting their career, right? And my daughter was, I think, 8 years old or 9 years old back then when I started my career. And I was an outlier there. But that didn't matter to me. What mattered to me is what I was doing. Was I doing what I wanted to do? That was my goal. And that helped me a lot. And I also want to touch base on what Aarti said, relationship management and in terms of written and verbal communication skills. So what I brought to the table was the maturity that I had, though I was comparing myself to a youngster. The maturity with which I came to the role, the understanding that I had, and the capability to, complete the work on time with as much grit and determination as a new joinee would, or a fresher from college would. I think that surprised a lot of managers that, oh, you're determined, you want to be here, you want to prove yourself to be successful. So relationship management is extremely important. Not when we say about relationship management, it's not just external, it is internal within the organization with the different departments, functions, and verbal and written communication skills. I would never, overemphasize that. It is very, very important for a finance role. I think we tend to ignore that. We are so caught up with numbers all the time that we forget that we need written skills, presentation skills, email writing skills. So these are all very, very important, and that will take you a long way. If you are able to, connect with different departments, break through different projects, being able to fulfill these requirements of the organizations, it will take the candidate a long way.
Okay. So we've had a very good 1 hour of discussion. 1 or 2 questions probably from the pre-event were interesting. So I thought I could ask at the end if time permits. So I think we can bring Jayashree into the picture here. Jayashree, there were questions on risk management. So, post-COVID especially, this has become an important aspect for investment management professionals. So there was one question on, what kind of roles and what do you actually do here? So can you give us, throw some light on this, Jayashree?
Yeah, I can be quick then, so in the interest of time. But what essentially this investment, as far as risk management for investment management world is concerned, you're managing the money, right? You're managing the money, as Aarti explained very, very beautifully. As far as the investment portfolio is concerned. So when you are putting together the investment portfolio, you're constructing the portfolio, managing it, it's susceptible to a lot of risks, whether it is market risk, or credit risk, if you have credit-driven securities in the portfolio. It could be a forex risk if you are exposed to multi-currency denominated securities within your portfolio, and several types of risk, right? So how are you going to identify these risks, A, within the portfolio, and B, once identified, how are you going to manage it better so that at the end of it, your portfolio doesn't lose money, right? The money doesn't drain out. The capital is preserved, and the profits that you are hoping to get from the investment portfolio is also not getting drained out, right? So that is what the risk management is all about. And when we look at that, we have a lot of risk models that we apply, right? Which also includes stress testing, back testing, looking at how, if I construct the portfolio with these 5 securities in there, if a COVID kind of a pandemic again happens in year 2024, if God forbid, but if it does happen, then what will happen to my portfolio? Is this going to suffer a loss? And if so, if there is a lot of potential or possibility of that, then how do I put a diversification into the portfolio such that, or a hedging into the portfolio such that the risk is mitigated, right? So at the end of it, my returns will still be going on as expected, or probably a little lesser than expected, but my capital will be preserved and my loss will be contained. The downside risk is contained. So I can go on and on this topic, but then in the interest of time, I'm just going to keep it brief here.
Okay. Thank you for that. Probably we'll take one more question, which just came in as we were doing this webinar. So somebody has asked, like in India, for example, a lot of regulatory restrictions in terms of accountability of investment managers on various counts, etc., has been coming about. So how to navigate this changing regulatory landscape, this person wanted to know. So any one of you can take this question.
Okay, I think I will just start, but I think Shagun and Jayashree can give more information about this. Per se, I think ethical dilemmas exist in all industries. They're definitely stronger in the investment management industry because you're dealing with other people's wealth, and the incentives sometimes related to performance are so strong that greed can develop quite easily. And that's why the regulatory, and considering the damage it has done to global economies in the past, the regulators have been extremely strong, and there are complex regulations around every aspect of working of this industry. Typically, yes, you have to be aware of the regulatory landscape in the industry, both from a global principles point of view as well as a local regulation point of view, and be aware of its changes. Now, from a global perspective, the principles of regulation are generally covered in the CFA program curriculum. And as I said, so are ethics, which ensures that you know the difference between right and wrong. We also have a strong code of conduct that governs our candidates and members. And that again explains to you as to how one should behave appropriately as an investment management professional. So if you have studied the ethics section of our curriculum and know our code of conduct, then you are fairly well preserved in terms of and prepared in terms of knowing what is right and wrong and how one should behave. But yet, the second part, in terms of understanding global regulation, that's again, as I said, part of the curriculum. Now, the third part is understanding local regulation and playing an important part in developing it or understanding it. That is something that one should, as a professional, constantly keep oneself updated. Now, if you are a CFA charter holder, and Shagun, Rinda, and Jayashree will attest to it, then you have access to the continuous thought leadership work that CFA Institute does, and which you can utilize to keep yourself updated. Secondly, you can actually volunteer as a charter holder for the activities of the institute as well as our local societies. We have CFA Society India, which is an active membership association in India. And as a volunteer, you have the opportunity to actually not just understand regulation, but even contribute to their development. Because as CFA Institute and CFA Society India, we constantly support regulators with both thought leadership as well as responses to consultation papers to help them devise regulation. And that's a large part of the work we do in terms of our advocacy efforts. So that again is one way of contributing to and understanding regulation.
Okay.
Over to you, Shagun, Jayashree, Rinda, anyone who wants to add?
Yes, I feel like, I mean, of course, I think Aarti covered all the important points, but I also feel like, regulation is something that you just have to accept. It's there, right? And since our profession is largely, where you have a fiduciary responsibility to your investors, I think a lot of it is even required just to ensure that there are no lapses or events that can, lead into what we've had in, the global financial crisis, or, even post that, where there have been company specific issues that have come up. So yeah, to a large extent, we just have to accept and live with regulatory changes. Yes, if there is something like, Aarti mentioned, the advocacy efforts that the CFA Society and CFA Institute do, where there are genuine challenges with the regulations that you feel when the regulator does come out with the draft paper, the consultation paper, it helps to kind of put in your point of view. And we've seen that in the past, the regulator, where it is genuine, has taken that into consideration as well. So I think live with it. There's really no option. And the second is really, like, if there is an issue, bring it up, and through the right channels, of course. So the CFA platform is a great channel to, because we do have a relationship with the regulator on a continuous basis. So that really helps to put your point across where necessary.
Okay. Rinda, Jayashree, do you want to add something?
No, I think Shagun and Aarti have covered it very well. I am aware of the advocacy efforts of the CFA Society and the joint efforts of the society and the institute. And as Shagun rightly mentioned, there is a lot going on that in that area from the institute and society.
Okay. So the pleasure having all of you, Aarti, Shagun, Jayashree, and Rinda. I'm sure this discussion has been really value adding for the audience, and they did get the answers that they wanted. Thank you very much. Thank you. And thank you to the audience for your patient hearing. Have a happy weekend, everyone.
Thank you so much.
Thank you. Thank you so much.
Thank you.
Thank you.